Hi everybody, this is Todd with our daily video. Hope you're having a great day today and things are going well with your trading. The market certainly has been a little bit volatile lately. The stock market has been moving up, liking what is happening with the QE3 information that's coming out that the Fed announced on Thursday. And, we end the week here with a lot of movement. Regardless of what we're trading, a lot of movement in the markets across the board. So we've got that to take into consideration. When we're trading, if we have a big movement, if we have lots of volatility, it makes us have to be cautious and really focus in on our risk management that we take and make sure that normally if we take and risk 2%, we may want to risk only 1% or whatever we're comfortable with. So we can't not trade. We just have to be more careful with what we're doing. What we're going to do today is we're going to focus in on this concept of the LL3 or the HH3. And when we talk about this, we're talking about either the lowest low of the last three, or the highest high of the last 3 bars. Now, we'll get questions about this because a lot of times we have our candle here, and then we have a wick or a shadow that goes above and below it. So the highest high is not the body. This is the body here. We're not going to count that because, if I can spell it, body. We're actually wanting the highs and the low. So we got to make sure that we look at that. So in this example, we've got blue bodies, but our wicks will go above and below that. So we have to know where the highs and the lows are, and we have to count those areas in order to enter into it properly. If we don't do that, we end up missing opportunities. Now, let's just talk about the highest high of the last 3 real quick. So, wherever the price is coming from, typically if we're looking at the highest high, we're saying that the trend has been moving up. We're getting a pullback in that trend, and it's starting to move up. And then looking at after the pullback for this to start to go up, and I've numbered these 1, 2, and 3. Could be the other way around. Now, if we had wicks on these, then it's going to be different, but we just are looking at the bodies here because that would indicate that that's the high, and so we would enter in as it moves above this high of the last 3. And that's what we're looking for. And again, it would look like this goes up, get a pullback, and then look to get in. The more deliberate that is, the better off that we're going to be. If it's really choppy going up and down, then we have to be careful because it's going to be likely to not work out quite the way that we want. If we look at an example of this, you can see here that the trend's moving up here. We get a little bit of a pullback, and 1, 2, 3, the highest high, we would enter in as it moves up above that in anticipation it's going to have a trend resumption. The same is true if we look at the LL3. So we're looking at the price that is basically in a downtrend, getting a pullback, and then we don't count this one because this is the current candle. But as we identify that low, so this would be the lowest low of the last 3 bars, our entry would be as it starts to move down below that. And we'll take a look at an example of that where we have the trend moving down. We get a little bit of a pullback and moving down below the lowest low of the last 3. So hopefully you've got that down, can visualize that. But this is a key important concept here. If we don't know where we're entering into it, then it doesn't do us any good. We've got to be able to know when we're looking at getting in and what that LL3 or the HH3 means. And if we got that, then we're good to go. So take some time to think about that. And if you have questions, let me know. If not, we'll be back on Monday to take a look at how the markets continue to move as the FOMC QE3 information continues to come out in the market. So until then, have a great rest of the day, and we'll talk to you soon.